Trump stokes trade war as world reels from tariff shock. President Donald Trump's move to impose sweeping tariffs on U.S. imports on allies and rivals alike sparked threats of retaliation on Thursday, intensifying a global trade war that threatens to stoke inflation and raising fears of recession. The penalties announced on Wednesday unleashed turbulence across world markets and drew condemnation from other leaders facing the end of an era of trade liberalization that has shaped the global order for decades. Trump said he would impose a 10% baseline tariff on all imports to the United States and higher duties on some of the country's biggest trading partners. According to Fitch Ratings, the effective U.S. import tax rate has shot up to 22% under Trump from just 2.5% in 2024, reaching levels last seen around 1910. As investors digested the news on Thursday, stock markets in Beijing and Tokyo sank to multi-month lows. European shares were also down sharply in morning trade, with top goods exporter Germany hit hard. Wall Street futures sank as investors shed riskier assets in favor of safe haven bonds and gold. Now facing 54% tariffs on exports to the U.S., the world's no. To economy, China vowed countermeasures, as did the European Union, Washington's friends and foes united in criticism of measures they fear will deal a devastating blow to global trade. The consequences will be dire for millions of people around the globe, EU Chief Ursula von der Leyen said, adding the 27-member bloc was preparing to hit back if talks with Washington failed. U.S. Treasury Chief Scott Bessent earlier warned any retaliatory moves would only lead to escalation. Among close U.S. allies, the European Union was targeted with a 20% rate, Japan with 24%, South Korea with 25%, and Taiwan with 30%. Even some tiny territories and uninhabited islands in the Antarctic were hit by tariffs, according to a list posted by the White House on X. This is not the act of a friend, said Prime Minister Anthony Albanese of Australia, a nation often described as America's deputy sheriff in Asia. The Trump administration's tariffs have no basis in logic, and they go against the basis of our two nations' partnership. Trump said the reciprocal tariffs were a response to duties and other non-tariff barriers put on U.S. goods. He argued that the new levies will boost manufacturing jobs at home. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, Trump said. Outside economists have warned that tariffs could slow the global economy, raise the risk of recession, and increase living costs for the average American family by thousands of dollars. Canada and Mexico, the two largest U.S. trading partners, already face 25% tariffs on many goods and will not face additional levies from Wednesday's announcement. This is how you sabotage the world's economic engine while claiming to supercharge it, said Nigel Green, CEO of global financial advisory DeVere Group. The reality is stark. These tariffs will push prices higher on thousands of everyday goods, from phones to food, and that will fuel inflation at a time when it is already uncomfortably persistent. The reciprocal tariffs do not apply to certain goods, including copper, pharmaceuticals, semiconductors, lumber, gold, energy, and certain minerals that are not available in the United States, according to a White House fact sheet. Following his remarks, Trump also signed an order to close a trade loophole used to ship low-value packages, those valued at $800 or less, duty-free from China. Known as de minimis, the order covers goods from China and Hong Kong and will take effect on May 2nd, according to the White House, which said the move was intended to curb the flow of fentanyl into the U.S. Trump is also planning other tariffs targeting semiconductors, pharmaceuticals, and potentially critical minerals. Earlier in the day, the administration said a separate set of tariffs on auto imports that Trump announced last week will take effect starting on Thursday. Trump previously imposed 25% duties on steel and aluminum and extended them to nearly $150 billion worth of downstream products. Now, as the reality of the new tariffs sinks in, companies around the world must weigh up how to adjust, with their options limited and unpalatable for their customers. It's an immense difficulty for Europe. I think it's also a catastrophe for the United States and for U.S. citizens, said French Prime Minister François Bayrou. Reporting by Andreas Schellel, Joe Cash, Philip Blenken-Sop, Kanishka Singh, Steve Holland, Joe Cash, Benoit van Overstraeten. Writing by Matthias Williams, editing by Sharon Singleton. How Trump's trillions in new tariffs could affect America and you. President Donald Trump says his new tariffs will punish other countries for unfair trade practices. Our country and its taxpayers have been ripped off for more than 50 years, but it's not going to happen anymore, Trump said Wednesday at a Rose Garden ceremony. But some economists predict Americans will feel the pain, at least in the short term, and low-income Americans most of all. Even as the stock market and consumer sentiment fall, the Trump administration is moving forward with 10% tariffs on imports from all trading partners outside Canada and Mexico, set to go into effect Saturday, plus additional duties on about 60 countries starting April 9th. U.S. trading partners are expected to retaliate. At least some of the cost of these new taxes will be passed on to consumers, with the lowest-earning households expected to be dealt the biggest blow. According to a Wednesday analysis from Yale Budget Lab, households with an average disposable income of roughly $43,000, among the lowest in the country, would see disposable income drop to 0.3% from the tariffs announced Wednesday versus 0.9% for the highest-earning households with disposable incomes above $500,000. When accounting for all 2025 tariffs, disposable income is expected to drop 4% for the lower-earning households compared with 1.6% for the highest-earning. The products that would get more expensive for these households include food, clothing, energy, and electronics. A tariff is what we call a regressive tax because it pinches families at the bottom more than it does families at the top, said Ernie Tedeschi, director of economics at the Yale Budget Lab. Lower-income households are more exposed to tariffs relative to their incomes because they spend a greater share of their income, Tedeschi said. If you tax consumption, then you're burdening those families more, he said. In dollar terms, higher-income households get hit harder by the tariffs announced Wednesday, an average of $4,600 per household per year for those in the top tenth and $1,700 for those in the middle. That $1,700 represents a larger share of the middle-income household's disposable income. The impact of tariffs would escalate over time for wealthier households as prices on assets such as stocks, bonds, and real estate decline, the Yale Budget Lab analysis showed. The Trump administration is betting any short-term pain will be worth it. With deregulation and government cutbacks, it has positioned the president's tariff agenda as a growth engine propelling an American resurgence. These tariffs are going to give us growth like you haven't seen before, Trump said. Peter Navarro, Trump's senior counselor for trade and manufacturing, said Sunday that tariffs will bring in $6 trillion in revenue in the next decade. Fear-mongering about President Trump's America First economic agenda isn't going to change the fact that industry leaders have already made trillions in investment commitments, too. Make in America, and that countries ranging from Vietnam to India to the UK have already begun to offer up trade concessions that would help level the playing field for American industries and workers, White House spokesman Kush Desai said in a statement to USA Today. The Budget Lab analysis showed the American economy will be smaller in the long run due to tariffs, but Tedeschi said Americans will adjust. We find new products that we can buy. Businesses change their supply chains, they move production. Life goes on, and we all make adjustments to our economic lives to accommodate tariffs, he said. But in the meantime, any household that can't put off a big-ticket purchase this year will feel the brunt of the tariffs, according to Tedeschi. Consumers have a little more time on durable goods, but we're talking months, not years, he said. Trump's 25% increase on vehicles and parts produced outside the United States took effect Wednesday and is expected to significantly increase the prices of new vehicles. Bracing for higher prices, some car buyers are moving up their purchases. Miranda Marsh, an engineer from San Diego, said she could have held off until summer but bought a new car in March to avoid price hikes and panic buyers. I bought quickly once I found a dealer that had the model and trim I wanted on their lot. It was maybe 18 hours or so from finding the listing and asking, "Is this available?" To getting the keys, said Marsh, who picked a 2025 Mazda CX-50 hybrid for its safety ratings. We actually beat someone to it. They were waiting to test drive it after us.